That's pressure.
No, no pressure.
I cannot talk like you, Amit, Paper, or who's the Chris? Oh, Chris is amazing.
Oh, Patel?
Yeah,
Yeah.
you guys have a way of communicating. Like it's crisp, solid, like to the point. I always go on a tangent. You'll see when I start asking questions.
Okay, give me a second. Let me just put this out there. Do do do. Okay. I know a lot of people have been asking about the spread, so I'm literally just gonna put it everywhere, I guess. Let's
Oh
see.
my gosh. Let's see.
Okay. Um,
Let you do the
I'll,
talking, and then I'll ask questions in between. Mostly it is not able to visualize the contracts, and like when you enter, like what do you consider. And the most important thing, I've tried it once or twice, with real money, right? Because it's so confusing for me, and in the end the problem is I don't know how to exit it.
okay. Yeah. So let me go back to. So again, for anyone that's coming in, we're going to be going over our spreads. So you said J. Roy. Okay. So you said you try to learn spreads many times, um, and you can't visualize the trades and didn't understand the profit and percentages. So what do you want to start with specifically? I mean, we could go to the basics. We could go from wherever you want. I mean, and
Yeah,
it'll be beneficial for anyone. So
yeah.
just hit
I
us.
think everybody hears the basics, right, quite often.
Hmm.
So if we can just straight away go to like a contract, right? How do you choose a side, or maybe not how you choose a side, but straight away go you pick a side and then show us that the contracts and like what do you consider the 88% probability you mentioned. Okay, where you show where do you look at it, and how are you figuring out the entire trade, right? You're gonna enter here, you're gonna exit at certain point. So yeah,
Okay.
we
Let
can.
me. Okay, my screen is off right now. Okay, give me a second. Right, my screen's off.
Yes, I
Okay.
cannot.
Let me sign into my brokerage, and I'll kind of explain that. Just give me 1 second. I'll use Robinhood. Um, if it's me, okay, we recognize this device. That's a good question, Edward. I will get to that one in just a second here. Okay, so we can go over two different scenarios here. First, I guess let's go over. Hold on a second. Let me just fix this. There we go. Okay, so let's kind of go over this. We go into. Let's turn the screen on, and then I'll get to your question, Edward. Okay. Okay, you can see my screen here. All good.
Yes.
Okay. So we're gonna do tomorrow's contracts because we're doing this after hours. Um, so for example, when let's say it's a day like today, okay? Let's say market was down over 8.85% by the end of the day. Okay. Basically, what I'm looking for in this scenario, and I entered. Let me explain my trade today. I guess let's do that first. Okay. So
Okay.
we obviously had this. and we had this. Those were our highs and lows at the time of my entry. Okay. I got into a iron condor right in between here. Okay.
Yes, I'm still seeing your Robinhood, so I didn't see
Oh,
when you.
I'm sorry. Thank you for that. Let me just make the whole screen. Cool. Okay. Now you see?
Yes.
Okay. So we had our highs and lows here in the beginning, but when I got into my trade, I got into an iron condor here. And for those that are listening, iron condor means I want price to stay in between two levels. It doesn't mean these two levels, but I'm just saying it. For the iron condor specifically, you want price to stay in between two specific levels. So in this case, let me get to my trade exactly again, so I could give the exact contracts. I sold, I know, a 24,550 put and bought a 24,530 put. Now, that's related to NDX. So I guess maybe you want to do it on NDX, maybe, but okay. So our low a day at that time,
Sorry,
you know,
can you share what were your contracts?
uh,
On what-
I sold a $24,550 put. Again, this is NDX related.
Mhm.
And then I bought a 24,530 put. So that is the put side of that spread where I want the price to stay above my sold strike. And the reason why you add a bought strike to any spread is for that premium collection. Um, so in this case, that put side, I'm going to explain it side by side here. That put side, I had $330 of room to the downside at that point, which is over a 1.3%, 1.4% move. And then I sold. So the high of the day here was 25,170, let's say. I sold a 25,400 call and bought a 25,420 call. So again, same thing, that $20 strike difference. Now I want price to also stay under that 25,400. So technically, if you take both sides of those solds, I want NDX to stay above 24,550 as well as stay below 25,400. So I'm basically giving myself a $900 intraday, move that I could have. Okay. So that is to keep that clear. Hopefully that is very easy to explain or understood, I should say. So I entered my condor around here where I saw we had a straight up move, a down move, and we were just chopping.
You're not sharing. You're not sharing. And can you also
What?
repeat the? You're not sharing. And can you also repeat the upper range, the second range?
Yeah, I don't know why that keeps going in and out. That's actually pretty annoying. I've never had that issue yet. Looks like we're having a lot of issues. Um, the upper range contracts, you said?
Yes.
So it was a 25,400 call I sold, and then I bought a 25,420 call. And I'll put that in the chat as well. Hold on one second. Sold a 24,550 put, bought a 24,530 put, sold a 25,400 call, and bought a 25,420 call. Okay. That was our iron condor. And you can see that written up in this chat here. And then again, I entered around here. We had up, down, chopping. Okay. Got past my 1030 level or time range. And I honestly, looking at the market over the past 2 days, you could see our high was 25,200 just about on Friday. And you could see our high of today was just under that. And our low, or I should say our opening, was 24,650. That low here is 24,600, and the low here is 24,540. So the low, I probably could have went a little further out for safety, but we were so far out here at the time, I was thinking, $500 would be pretty clean. Obviously, it did get closer to that as the day went on, but that hopefully that was clear and understood, correct?
Yes.
Okay. Really quickly, let me just get to one or two of these questions.
So sorry, Nos.
Yeah.
You
What's up?
mentioned something about $500. That part I didn't really get it.
Okay, I'll go. I meant when I was entering, I was at 25. It was at like 25,000 on the dot, let's say. So the put side of that, the put side of that was about $450 out of the money, is basically what I was talking
Got it.
about. Let me answer this question really quick. Have you ever had an account that got blown through spreads? I personally have not. This is trading through volatility and all of that, especially even during the 2020 COVID market. I even did spreads. It was just personally, I stick to my risk management. 200% stop loss. So, for example, if you guys have seen me talk about this, if you, as a trader, let's say for me personally, I want to make $100 per day. That means my risk is going to be $200 per day. So if I want to make $100 per day, my risk is $200 per day with spreads. Because the reason why I do that with spreads is because the probability of profit is much higher with spreads. And yes, the profit itself is much lower, but that consistent compounding is why you can get that 200% stop loss and be able to make that back in 2 to 3 trades and be green. It's just what I found has worked for me. I tried 300% stop loss. I tried 250% stop loss. I tried 150% stop loss, and I found that at 200% was right down the middle, perfect, and it's been absolutely exceptional. Another question to answer here: do I watch it all day, or do I set a stop at negative 300%? I do 200% for the stop loss, and because this challenge account that I have on Robinhood, they don't have stops on for spreads, so I do technically watch it, but I'm also actively trading, so it doesn't really bother me. Now, for my other brokerage, like Schwab or Thinkorswim, whichever you want to call it, old TD Ameritrade, they do have stop losses for spread. So you could just set a 200. Well, you could just set a 200% stop loss and just go about the rest of your day. So E-Trade, Schwab, Interactive Brokers, stuff like that, they do have stop losses for that. How is the collateral considered the max risk? So collateral, for example, let's use this example. I'll give you two examples. Okay, so if NDX, we are buying a $20 strike wide, as the example formed here at the 25,400 and the 25,420, that is a $20 strike difference. You're going to need $2,000 per contract to open a position there. Now I'll give you an easier example, just number wise. Let's say we're going to sell a QQQ put at 600 and buy a 599 put. That's a $1 strike difference, and that'll be a $100 collateral needed per contract. So that is how you do the max risk. Early assignment, no issues with NDX. It closes, it's like a cash assignment. It closes at 4 p.m. You don't have to worry about that. I've never also personally been assigned anything for my spreads. And then last question here before we continue. Do you rate the trade all at once, or do you rate it at support and resistance? So this is a good question. For example, when I'm trading spreads, I personally want to open positions like in that direction. Now, that's not the best way to put it, but for example, I could explain it here. Okay, let's say I thought the market was not going to go higher today. I would want, personally, ideally, would want to sell a spread at a rejection high for a call spread, because I'm already getting that move in my favor And now I could get a call spread that's even further out, let's say 25, like the one I got today, 25,400, and I have less risk of that being hit. The probability of profit of that specific spread is going to be higher on, at the rejection zone. Let's say in this case, let's say we just bottomed here. Okay. Obviously we went lower, but, let's say we had a low here. I got a put spread here. I could buy the 400 points out that I did on the 550s, which in this case, never got in the money. And I also was never 200% loss today. That one ended perfectly. But I could buy a put spread. I want to be buying, or I should say opening the spreads in that direction it's going. So call spread, I want to be buying, on a run up, not technically on the run up, but when I start to see weakness at the top. Put spread, I want to be buying when we start to see possibly curling, at the bottom. That's basically what I'm trying to get to here. And that condor is a great example of this, where we wanted to stay in between a certain price. We had a major up move, then we had a major down move, and then we just chopped. I got a condor in here. You could see we were just chopping. Again, perfect example of that one. So thanks for your time. Do you trade a condor by some? Yes, 200% stop loss. Yes. Okay. Sorry about that, Jay. Just wanted to answer those and get those out of the way. What do you have next?
Are you asking me?
Yes.
Oh, yeah. So, how do you manage it throughout? Like, when do you exit the position? And somebody asked this question, right? When I've tried it in Fidelity, you cannot sell it together, right? It is each contract is separate, and you have to manage it and sell it. So it's very overwhelming because of the collateral and other stuff, and assignment. Um, I almost get intimidated and stop doing it, and don't end up doing well.
Okay. So you're saying when you're opening a position or closing it, you can't do it together?
When opening, you can a little bit in Fidelity, but closing, you cannot close all at once.
And that's for Fidelity. I've never used Fidelity personally, so.
Yeah, this is for Fidelity, and I've tried it in Robinhood. It's you can close it together, but you have to put your limit order and wait for it to hit.
Correct. Correct. Yeah, for Robinhood and honestly every broker I've personally used, you can open the contracts together, which I preferably want to do at least, and close them together. So I've never really seen that personally, so I'm not sure on that Fidelity side. That's interesting to hear. And honestly, not shocking, being that Fidelity's so old school and just does not update to the times. But okay. Yeah. So I would say, for example, can you state the back half of that question again? Sorry.
How do you manage it, right? Do you at any point do you decide to close it out, or you just wait for it to expire in your favor?
Yeah. Okay. Perfect. Sorry about that. So I think today is another perfect example of that, and I'm going to share that right now. So, as you could see, I was in a condor today. So again, upside and downside, I wanted to stay in between. We obviously broke out of this level to the downside, and it kind of accelerated pretty quick. I mean, we got 200 points to the downside pretty quick there. In the case that I was only over 100 points out of the money on that put side. In this case, I want to look to, honestly, in any case, when I'm in 70% plus profit, I want to take profits. It's just simpler that way. You don't have to worry about it. In today's case, let me change my screen here. Okay. In today's case, you should be able to see this. Yep. I took 56% profit on those 550/530s, that whole entire condor. I closed the whole entire condor together for 1350 profit, 56%. And then I opened a put spread even further down, just a put spread itself with only an hour left, even further down to kind of collect the back half of that second premium in a way. So that's one thing, I'm looking to take those profits, especially if we get a nice, in this case, a nice bounce. And you know what, obviously it was teetering. Take my profit and move on. I'm happy with that. We always look to win another day. There's always going to be another trade. In this case, it was a profitable trade. But if things aren't looking that great, and we are able to get out for a profit, I'm going to do that. So again, just risk management, trying to be smart, size appropriately, stuff like that.
Thank you.
Yep. What else do you got? Or if anyone else has any questions, please do share. One second. Am I using Heat Seeker to guide me on levels? That's a good question. Yes, I do use it to guide me a bit. For example, today, hold on, let me pull this up. Heat Seeker. Let me go to the Trinity. You should see this. Yep. Okay, you do. Okay. So, actually, I may have to go individual. Yeah. Okay. I'm not going to go too in depth there. But basically, we had 610 and 609 today, or I think it was 609 actually, and we were under it as a big yellow node. I know we had a yellow node below an SPX that we were getting to, and we had some purple nodes above, not that big. But I could obviously tell, one, the market was obviously bearish, and two, we had some resistance above us. So yes, I do use it to help me in directing a trend or finding key levels. So yes, to answer that question, yes. What days do you not trade spreads? Honestly, that's a good question. I definitely do not trade spreads on FOMC day, personally. Do not trade spreads on those. I do. Some days I just don't trade spreads if I just don't like the action. If it's later in the day and I just don't see much, that's just another. It just depends day per day. But usually, almost every day, I am trading spreads. If the opportunity is there, I'm going to take it.
Not just curious. Today,
Yep.
The market gapped up, right? And not gap. Did it gap up? Early morning, it was up, and then I think it didn't gap. It went back to original level. How did you decide to choose Iron Condor instead of any other methods?
Yeah. So again, chart is up, right? Yep, chart is up. Okay. So what I saw here is we opened in between this green candle on Friday. Okay. We had the 50 SMA here. We had the 9 EMA and 21 EMA above. So in my mind here, and on the price action that it did within that first hour, I always wait the first hour to take a spread. That up and down and that chop, to me, it seemed like we weren't going to see a move really either way. In this case, we did see, a little move to the downside. Around 2 p.m. Eastern is where we broke down. So it took all day to basically do that. But, I didn't really see a full extension of any move today. So personally, for me, where we open inside of a candle like this, I'm thinking Iron Condor, and after that first hour of the up and down and then the chop, it kind of confirmed that to me, and it was basically right until later, very late in the day. So that's how I basically chose that Iron Condor, just based on past experience and trading, honestly.
Okay, thank you. When there is earnings or news overnight and it gaps up or gaps down, how do you take advantage of that, and what do you?
That's a good question. So first off, let's talk about something like this. Okay. So Friday, we gapped down, I think, like 1.6, 1.7%. On days like that, I want to be selling puts, actually, honestly, like right at the open. Now, it is not full size. It's almost like a third of the size of what I normally do, just in case I need to add in. But when I'm able to open a put at that level, I sold 24,000 puts. So I was literally $650 out of the money, already down 1.6% on the day. And I was able to go literally about 2% more to the, actually a little bit over 2% more to the downside. So let's put this into perspective. Okay, 2% days on the market happen over under 7% of the time. 3% days on the market happen under like 2% of the time. So the probability of profit of that alone was very high, being over $600 out of the money. So I sold those. I was able to get $1.40 in premium. And within minutes, actually, if we look at Friday's action, within minutes, you could see we ripped. And those $1.40 premium contracts literally went to about 30 cents in under 20 minutes. So something like that, where we are gapping down over 1%, or north of 1%, or gapping up 1%, something of that sort, I am looking to sell something right at the open pretty far out, because the premium's already juiced and I'm able to collect, really far out at a high probability of profit.
Okay, was that a spread that you played, or
Yes, it was a put spread.
put spread?
Correct. And then actually later in the day, so I talked about wanting, when I start to see rejections, this is still at Friday, so last Friday, when we start to see slowing down and a rejection, I actually shorted the market on this candle, and I opened a call spread on this candle. We are up now from that negative 1.6, 1.5% on the morning, on the opening. We are up on the day 0.8%. So we had a major 2% swing, and I was looking to sell not covered calls. I was looking to sell call spreads, and I traded puts. So I had basically double-sided there, and it worked out absolutely phenomenal from there. I mean, we dropped over 200 points there. I started to look at the move. Yes, we're going up. Yes, we're going up. But you could see we're starting to slow down, slow down, slow down. And then we have that first lower high possibly right here. Let's look on a 3-minute. Give me a second. You can see we start to see some upper wicks. We start to just see it slowing down. We start to see the EMAs curling. And then on this candle is where I shorted it when we couldn't get any higher above this candle. And I went short and did a call spread. So in that, on Friday, I had a put spread at the open and a call spread actually literally at the highs. It was a perfect day. You couldn't have asked for anything better, honestly.
Got it. I think somebody has a question. I will wait for you to get to that.
Yeah. Not sure if asked, but how do you determine or choose the spread width? Do you prefer wider spreads or tighter? Okay, so because I go out in on the strikes, because I go higher probability, usually $10 to $20, and again, this is regarding NDX at least, a $10 to $20 strike width gives me really good premium. And I'm able again to go out further because of this instead of doing a $5 with to get higher to get higher probability and lower risk with a higher premium doing that $20 out of the money there. So I like to do the $20 NDX, which is $2,000 per contract. For example, like today, you could see let's go to this. I'm basically hitting around 4% per trade. Now this one would have been bigger. Let's say I just want to show you. Let's say I did close it at 0 and I let it expire. It would have been an 8% trade. But I closed it at 0.70. But hey, listen, I'm making 4%, on my money and that day. And this adds up. 2,700 on the day, 1,700 on the day, 1,350. That adds up. Now, it doesn't matter what size of the account you're doing. Again, I have a larger account now with this 5K challenge that I did. That's at 78,000. So specifically, my profits are getting bigger because I'm sizing bigger now. It's all about compounding. That's all I really want to get in people's head. It's about compounding. Doesn't matter if you're making 200 a day, 500 a day, 2,000 a day. That consistent compounding. In my Discord, do I trade these plays live? Yes, I'm live trading every day. Regular long calls, regular long puts, long-term investing, and spreads every single day. It's written out as well as I'm on live if people have the time to go on live. So that's a good question there. Jay, what about you? Any more questions?
Yeah, just maybe it's something that you already answered, but a different example. You know how UNH went down, gapped down a lot, or Fiserv, and I saw Chris Patel, he had this big bets, like a swing or a leap. Those were all spreads. How do you play that, and when do you play that? The same day or 3 days after? Because paper says always wait 3 days after a big move. So if you can comment on that, how would you play that big trade?
Okay, so you're basically saying like if a stock has a big move, is that what you just said?
Yeah, like UNH or Fiserv, which went down a lot,
Okay.
reasonably. Like, how do you play spreads, and what spreads would you play if you think in the long term it's going to go up?
Perfect. Okay, let's do UNH. Let me get rid of all my stuff here for a second. Okay. I'd like to do an example of one that is really down right now. Let's see. Hold on. Give me a second. Well, actually, no. Yeah. Okay. Let's do this. Okay. Let's do an example on Amazon. Give me a second. Hold on. Now, this isn't a major drop like you're referring to, but let's kind of go over this for a second. Okay. I mean, Amazon is obviously taking a tumble, basically $30. Me personally, I actually opened long calls today at 2:30 for a month out, but you could do it another way. So, for example, let's say you think Amazon is going to stay above a certain price, or you want to technically go long Amazon. Okay. You could do it in an option selling way. Or you could obviously do shares or regular calls. It doesn't matter. So let's do this. Okay. Let's say I get December 19th calls. Okay. I'm going to give it a month to get more premium. Okay. Amazon is 230. Let's just say it's 232. Let's just say it's 230 for simple, talking. Okay. Let's kind of look at where our recent low was. That's 211. And also over here at 211, we have the 200 SMA here at 215. We have the 50 SMA here at 228. Okay. So I'm thinking, okay, 211 is a major spot. 200 in general would be a major spot. So what I want to do is let's see. I'd probably look at those December 19th. And if I want to be extremely safe, I'd sell a 190 put, which is a 93% chance of profit right now. And I'd buy a 180 put. And that is being extremely safe, which gets us, hold on, give me a second. Let me do this in front of you.
Yeah, can you go? Yeah, I was going to ask.
Okay, so let's be extremely safe. I'll share like two little instances. Where is my options? Where's my options? What the hell? Oh, there we go. I never trade on the computer. That's the only thing in my 10 years of trading, 10 plus years in trading. I think it's just too slow. Okay. So I'd sell a put for December 19th, sell the 190 put, then I go to buy and buy the 180 put. Okay, so this gives us $27 of credit at a $10 strike difference. So this would be a 2.7% return as you're risking $1,000 per every contract you buy. That's a very conservative way. And you can see where I got that chance of profit right here, the probability of profit, 93%. Or you could even go a little bit closer. We talked about 211 being a big spot. We talked about 228 to 230 being a big spot for support. So we go a little bit closer here, and we could do the same thing. And it's actually not that much of a difference. I thought it would be a little bit more. But you could get 3.6%. So in this case, honestly, personally, I'd probably go the 190, 180, get that extra $5 of safety and that extra 2% or 1.7%, and collect here. I think that would be better. I mean, you're only missing out on another under 1%, like 0.8%. That's one way you could do it. That's how I would do it. Again, I'm more conservative. Some people are much tighter where they'd sell, a 210 and buy a 200. I like to be more conservative. It's what has given me consistent income over the 6 years I've traded spreads. I don't have to worry that much. It's more consistent, more compounding, and it's just how I personally do it. Some people are a little bit more riskier. So I know paper would probably do like something like this. So, but for me, I like to be safer.
Got it. And you're expecting it to expire, right?
Yes.
Okay. Yeah, I don't have any further questions now.
Okay. Let me see what people have here. Ooh. This guy wants me to do a call spread on Rivian.
Yeah.
Okay, let me check.
Next one, Oscar.
Yeah. Can I share the spreadsheet? Yes, I will definitely do that. Let me get that for you right now. And I'll post that online again too on X and everything. Oh, I could definitely give you a call spread example on Rivian. I just don't know if it'll work out for you, buddy. Let's do the December 19th for you. We'll give you some time. Now, this call spread would have worked much better if you sold it at those highs. I'd say we think Rivian is going to stay below. That's glitchy. That's not right. Okay. Let's do something else here. Hold on. Wow. Premiums of this are horrible. I wouldn't even give you an option to sell a spread on this. Horrible. Horrible, horrible, horrible. Oh, that's the buy side. That's interesting, actually, how bad those are on that. Yeah, you might just have to do push instead. Might just have to do that. Does anyone else have any questions on spreads? Just put them in the chat. And we could go over those. Hold on 1 second. Do. Okay, let's do one more thing here. Let's close this. Let's go to this. Okay. So yeah, here is my profit and loss that I've been tracking every single trade on that challenge, that 5K challenge. Here's my monthly add ups. So the only losing month I had was March. And as of right now, barring anything, I should be breaking the August and September highs, or I guess I could say the August highs in November for the best month in this account. As you could see, once we got into August here, I started sizing up a bit more. Other than that May outlier where I don't think I really lost any trade that month. Let's see. Where's May? Yeah, it's because I did not lose a trade in May. That's why that was an extremely great month. And you can see I was definitely sizing lower. And at this point, I was trading Qs a little bit more because it was just making more sense for the account. So yeah, this has been absolutely phenomenal. I think spreads definitely need to be looked into for people who are struggling with trading. I've said that time and time again. I'm going to be doing a live with a trader who has lost a large amount in the market. We'll talk about 6 figures, and has only traded spreads since we've connected over 2 years, and has turned his account totally green, and it's been a game changer. Again, if you're struggling with trading, I would at least try the strategy out for a month, and just see how consistent it can be for you. Again, nothing is 100% of the market. You will lose no matter what the strategy is, but you will start to see that this is a strategy that could literally become a second income for you. And that's why I talk about spread so much. People underestimate spreads because they see this. This is what they say. This is what they say. They see this amount of profit and they're like, why do I want to make $100 a day when I see people online making $5,000 a day, $10,000 a day, $20,000 a day? Well, that's where you're going to get yourself screwed. Believing that could happen every day. At least this could happen every day where you can make $100 a day. I mean, that's $500 a week. That's $2,500 a month. That's an extra $2,500 a month, barring you don't lose a single trade. Now, let's say you do lose a trade. Let's say you lose $500. That's $2,000 a month. Let's say you lose 2 trades. Let's say it's $1,500 a month. Let's say you lose 3 trades. It's $1,000 a month. I mean, that is still great. Now, again, this is sizing with a very small account at this point. 2,000, 3,000, 4,000. Let's say you put 20,000 into it, like here, or I should say we're getting higher now. where we're starting to size 10,000, 10,000, 10,000, 10,000, 10,000, and I'm making 300, 400, 500 a day. Again, compounding. Look at how much this adds up here. Look at how much this adds up. And that's why spreads could be a really great strategy. So that's why I think people highly overlook spreads because of that small profit, but it's just a consistent compounding strategy. And if you lose, you make it back within 2 to 3 trades if you follow that 200%. Again, it's just a risk management thing. Tone in those emotions and move on to the next trade. Same thing if you're doing regular trades. Tone in those emotions, cut the loss, move on to the next trade. There's always another opportunity. Be patient, wait for it. Is your stop the same with swing spreads? So funny enough, I don't swing spreads that much. Funny enough, I've just been so consistent with zero DT for the 6 years I've been doing it. I just really haven't done it. Now, with that said, you will see me talk about, I'm swinging a spread, or I have Amazon put spreads or something like that. But yes, the stop is the same. Obviously, let's say barring something crazy happened, and the stock fell 5%. I don't know, something like that. Obviously, you could be under that stop, but something I personally haven't gotten into yet. Like I haven't ran in trouble with yet. But yes, 200% no matter what is what I stick with. All about consistency. I love that. Coming for your lifetime in your Discord. Okay, I'm just now joining. Hey, what's up, Chris? How do you place a spread? Is it like a call or a put? Okay. Give me a second. Let me pull up Robinhood again, and I'll show you. How to do this. Okay. Oh, no, I don't want that. Okay. Let me pull this up. Chris, I'm going to show you just Robinhood because I have it up. Okay, so again, I'm just joining. How do you place a spread? Is it like a call or a put? It's as simple as doing something like that. Okay. Let's say I'm doing tomorrow contracts. Okay. And let's do Wednesday. Okay. Let's say I want to sell. Okay. Let me look at Qs. Give me a second. I want to give you an example at least. Okay. Our high on Qs the last 2 days is 613. The high on the candle before that is 618. The low is 597, and the previous lows are 589. Okay. So 589 and 617 are our low and high over our past 20 trading days. Okay. 589, I'm doing 2 days out here. So I could get pretty good premium going 2 days out. And at an 88% probability, let's make it 90%. Okay. Let's do that. Okay. So I'm going to sell a 583 put, meaning I want Qs to stay above 583, giving me $21 of leeway here and a 90% chance of this turning profitable. And let's say I'm going to buy a 580 put. So I have a $3 strike difference, 583 to 580. That means I'm going to need $300 per contract. Okay. My total credit is 15 cents. So let's do simple math. Let's just do 30 divided by 15. You're looking at a 5% return here on your money. Okay. Now let's add to the call side. Okay. Let's do a condor. Make it simple to show you both sides here, Chris. So we had said 617 or 618 was our previous high. Let's go a little bit higher than that, just like we just did on the last example. And we're going to get a 93% chance of probability. Selling a 622 call. Let's go buy a 625 call. So now just because we have 4 separate strikes here does not mean we have to add on another $300 in collateral because we have another, like the call side and the put side. The same strike difference on each side, $3, $3. So the collateral needed per condor now, because we want Qs to stay in between 622 and 583, the sold strikes, is still going to be $300 per collateral per contract. So now our total credit is 30 cents. Let's just make it 30 cents to make it simple. We're looking at a 10% return, $30 in profit per every $300 in collateral per contract to open the trade. Hopefully that was very easy, Chris. I mean, obviously I would execute the trade, but we are in after hours, so can't really do that.
Yeah. Can you explain a scenario where this could go south? The trade.
Yeah. So like you're saying, if it's going against me, it's going. Okay, let's say we're in this condor. Okay. You're stating if it's going really high and my put side is 100%, but my call side is obviously losing money.
Either any scenario.
Okay. I would say perfect example is today. Honestly, hold on. Let's talk about today because it can't get any easier than this. And I already talked about this a little bit earlier. So this is like a perfect example. Okay. I got into a condor today. I was expecting us to kind of chop, and again, worked out perfectly until about 2 p.m. Eastern, where we started that downside. Okay. I was in a 24. I'll just talk about the put side because the call side doesn't even matter here. I mean, that was full profit. I sold a 24,550 put, which is down here, and I bought a 24,530 put. So I needed NDX, which is what I was trading today, to stay above 24,550, where I have my cursor right here. So if my cursor was down here, I need it to stay above that level to make profit. Obviously, as we drained down here, that put side was starting to get beaten up. The premiums are rising, which in this case, when premiums are rising, you're actually losing on the trade compared to, a regular option trade where you actually want the premiums to rise. You get in a call at $1, it goes to 110, you made, $10 per contract. You get in a spread at $1 and it goes to 110, you're losing $10 per contract. You want the spread to go to zero. You want those premiums to go to zero to make full profit on a spread. So in this case, I was starting to lose money here. And on the bounce, I just took my profit and I made profit on a 56% trade. Now, let's say, it pushed lower, I would get stopped out at my 200% stop loss. So that's basically how I kind of would navigate it. Jay, if it's not going my direction, and I'm able to get out for a profit, it's looking like it is really weak in this case, and the market was tanking down here, I would look to try to get out for a profit or take my 200% stop loss. Again, it's all about getting to that next trade and having that proper risk management. It is okay to lose a trade. So hopefully that answered your question in the best way possible there.
Okay, thank you.
Okay. Next one. Okay. If you have to be away from the computer, is SPY, QQQ better than SPX or NDX? So you can manage setting stop losses and not getting killed by the bid and ask spread that come with NDX and SPX. Honestly, I would say yes, 100%. SPY and QQQ would be better than SPX and NDX. SPX is honestly even fine. It's just that NDX does have a little bit of that what's it called? Well, I can't even think of the bid-ask spread there. There we go. So yes, I would even say SPX is pretty fine. Now, for example, if you have a brokerage that allows you to set stops on spreads, such as Schwab, E-Trade, Interactive Brokers, I would just if you know you're not going to be there, I would just set a stop and move on, or have faith in that being filled. Obviously, you could check in, but I have had no issues with that personally. Will you do some live entries? I can't do them right now. Market's closed for specifically what I'm referring to here. So no, I can't. But during the day, on Spaces, in my Discord, live trading, yes, I do live entries. Do you need a cash? You need a cash account and level 2 options to work for this. You actually need, for what I'm specifically talking about, put spreads, call spreads, iron condors. You need a level 3 options as well as a margin account. I never use the margin, but you do need that to actually open these trades. Do you have a Discord, sir? Oh, yes, I do. It's at the bottom here. BullTradeFinder.net. For $15 a month, do I get all your option trading? Where? No, I would refer to the Discord, Drano, because that's where I'm doing the live trading. That's where I'm doing posting my trades and stuff like that. So I would refer to the Discord. That's also at the banner at the bottom, the bulltradefinder.net, or in my profile there on X. How can you day trade on margin? So you're saying if you're under 25,000, is that what you're talking about? If so, you could do obviously 3 day trades a week, and go about that. That would be, perfectly fine. You don't have to really worry about it then. When I was under 25,000 on this account, I was doing those 3 days a week. So that's basically how I kind of went with that. Yeah, would love to have you, man. I'd love to have you. Yeah. So with 25,000, you have no worries. You would be over 25K. You could do unlimited day trades. You just need a margin account and level 3 options. Does anyone else have any questions here? If there's no questions, we will look to end this.
Thank you, Knots. Really appreciate taking time.
Yeah, of course. Can I trade off of Robinhood? Yes. I trade off Robinhood for my wife's account. So yes, 100% can trade spreads off Robinhood. Yes, you have to turn to a margin account. You need a margin account, and then you could do level 3 options. Damn. Okay. I mean, again, I've seen a lot of people ask if you guys want to trade with us every day. I mean, we go live every day. You could join us at bulltradefinder.net. Links in the bio on X as well. So if you want to do that, more than happy to have you. You don't have to. I'm not forcing anyone to join a subscription. That's all up to you. Do I lose my cash account once I go level 3? I honestly don't know. I just always did the margin first. I always turned the cash account into a margin account first, then went to level 3. So I'm not too sure. Yeah, I'd love to have you. Love to have you guys. Again, if you guys have any questions, it doesn't matter if you're paid or not paid. Just always ask. I answer every DM. You could ask anyone that. I just want to see people succeed. I mean, I would hope the same if I was in someone else's shoes, that they would, reach out and try to help. So that's basically, I mean, this is what I do for a living. I trade every day. I'm on Spaces every day. I would, again, hope the same for someone to help me out if I was ever in trouble or needed help. So if you guys have any questions, always feel free to ask, send a DM, blah, blah, blah. Doesn't matter. You're not wasting my time. I'll answer as soon as I can. And we can get on a call. I mean, literally, Jay Roy, the person who was asking questions on voice here with me, he was asking questions about spreads on X. I literally said, let's just get on a call. And I thought to make it like this so we could share it out to everyone. If anyone had questions, we could get that all done. And everyone could see the recording. Everyone could go back. Everyone could watch this. So it just worked out perfectly. Again, if anyone has any questions, please ask. Other than that, I love all of you. Have a great night. Let's get back to trading and kicking ass tomorrow. If you guys are interested in trading with us live, check out bulltradefinder.net. And other than that, I hope everyone has a great day and night. I'll see you guys tomorrow.